Well, 2023 has been a mixed year for the ferrous companies, with no worries on the domestic front. But China has been in disarray. That's made the global ferrous industry a little bit nervous. Let's look at the key factors that will determine whether a bull or a bear of steel will show up in 2024. Now, the domestic steel market has been robust so far, and the latest World Steel Association outlook suggests that Indian steel demand is expected to clock 136 million tons in 2024, which will be driven by higher infrastructure spends and also the government push in an election year. And though domestic demand has been strong, steel prices have recently corrected by around 6%, while Chinese export prices have increased by around 4.5%. The high inventory at mills and distribution channels, that's put pressure on domestic prices. And this pullback in November was also due to the festive season, which results in sluggishness in construction activity and is impacted by lower labor availability. But post the correction, domestic prices are now at import parity in comparison to a 12 to 13% premium to import parity in October 2023. The downtrending steel prices will mean flattish steel prices on an average for the quarter gone by, but the cost of raw materials, well, they are higher, as iron ore prices are up by around 14%, which has been led by stimulus hopes in China and lower production guidance coming in from Vale. Coking coal prices have been hovering around the $300 per ton and could stay elevated, which will be driven by weather and labor-related issues in Australia. So the spreads in quarter 4 could come in under some pressure due to the lower exit steel prices in quarter 3 and higher raw material prices as well. Now, higher coking coal cost, well, that's a bigger headwind for our domestic steel industry in comparison to higher iron ore prices. And I'll tell you why. Players such as SAIL and Tata Steel, well, they are backward integrated. And prices in India, iron ore prices, are lower in comparison to the globe. Now, let's focus on the Chinese ferrous industry. That's the largest producer of steel. And so the big question is, has China bottomed out? The focus is on two aspects, which will be key to track in 2024. One is the Chinese exports, and the second is Chinese spreads. Now, on Chinese exports first, they have been elevated, and the key reason is the feeble steel demand due to the weak property market. China's exports have remained elevated for the past 4 months, with the gross exports registering its fourth straight month of 8 million tons. And that's 40% higher in comparison to the average monthly run rate that we saw in 21 or 2022. Now, so China is on track to clock steel exports of 91 million tons. That's going to be the highest that we've seen in the last 8 years. India has now turned into a net importer from July 2023, as domestic prices were at a premium in comparison to imports, and a surge in Chinese steel exports made Indian exports uncompetitive. Well, steel imports into India could remain elevated, say, till January 2024. That's what could keep domestic prices under some pressure. But the Chinese steel spreads, well, they have now corrected to around $100 per ton. And that's the lowest we have seen in the last 13 to around 15 years. And there have been various false starts in terms of demand revival in China, but the recent initiatives could have some kind of a positive impact. But at these suppressed spreads, many of the Chinese mills, well, they'll not be making any money. So the hope that things have bottomed out, and this in turn will support global steel prices. So though the first half has been okay, the second half of this fiscal could be weak for the Indian steel companies. The street, though, is hoping that China will rebound. That in turn will support steel prices and reduce Chinese steel exports as well.